Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Teva Pharmaceutical Industries Limited annual report. Teva Pharmaceutical Industries Limited offers a wide range of businesses and services across the pharmaceutical industry. At its core, the company develops, manufactures, markets, and distributes generic and biopharmaceutical products globally. Its product portfolio includes various dosage forms such as tablets, capsules, injectables, inhalants, liquids, transdermal patches, ointments, and creams. The company's offerings can be broadly categorized into several areas. Firstly, it provides generic medicines in various forms, including sterile products, hormones, high-potency drugs, and cytotoxic substances. Additionally, Teva focuses on specific therapeutic areas such as the central nervous system, CNS, respiratory, and oncology. The company also offers active pharmaceutical ingredients and contract manufacturing services. Furthermore, Teva operates an out-licensing platform that provides a portfolio of products to other pharmaceutical companies. Its product pipeline includes various branded medicines for conditions such as multiple sclerosis, migraine, neurodegenerative disorders, schizophrenia, asthma, and chronic lymphocytic leukemia. The company also offers over-the-counter, OTC products under several brand names. In terms of collaborations, Teva has agreements with several partners, including Medincell SA, Sanofi, Alvotech, and Biologic Design Limited. These partnerships enable the company to expand its product offerings and reach new markets. Overall, Teva Pharmaceutical Industries Limited is a diversified pharmaceutical company that provides a comprehensive range of products and services across various therapeutic areas. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what could cause a stock price to skyrocket. The stock price of Teva Pharmaceutical Industries Limited has seen a significant surge in the past year, leaving investors and analysts eager to understand the underlying factors driving this trend. One possible reason for the increase is the company's efforts to restructure its business and reduce debt. By shedding non-core assets and implementing cost-cutting measures, Teva may have improved its financial health and increased investor confidence. Another factor contributing to the stock price growth could be the company's focus on developing new products and expanding into emerging markets. As a leading generic pharmaceutical manufacturer, Teva has been investing heavily in research and development to create innovative treatments for various diseases. This strategic shift towards more profitable areas of the market may have attracted investors seeking long-term growth opportunities. Additionally, changes in global healthcare policies and regulations could also be influencing Teva's stock price. For instance, the U.S. government's efforts to reduce prescription drug prices through legislation or executive actions may have created a favorable environment for generic pharmaceutical companies like Teva. As these policies take effect, investors may be betting on Teva's ability to capitalize on this trend. Lastly, market sentiment and investor expectations can also play a significant role in driving stock price movements. If investors become increasingly optimistic about Teva's prospects, or if there is a surge in demand for generic pharmaceuticals, the company's stock price may rise accordingly. In conclusion, the reasons behind Teva Pharmaceutical Industries Ltd's skyrocketing stock price are likely multifaceted and influenced by various factors. While it is impossible to pinpoint a single cause without more information, these possible explanations provide a starting point for further analysis and investigation. Teva Pharmaceutical Industries Limited market capitalization of $42 billion is significantly larger than the average industry peer of roughly $3 billion. This shows that Teva Pharmaceutical Industries Limited holds a significant advantage in their industry. Teva Pharmaceutical Industries Limited trades at a higher price-to-earnings ratio of 30 times and a higher price-to-book ratio of 5.27 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company exhibits a very high leverage profile, with liabilities accounting for 85% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The net income of the company experienced a significant decline in recent years due to various factors. In 2024, net income decreased due to increased competition and pricing pressures. This trend continued in 2025, with a 23% drop from the previous year. The decrease can be attributed to supply chain disruptions, ongoing optimization efforts, workforce reductions, potential divestitures, and associated costs. On the other hand, profit margins showed an improvement in 2025 compared to 2024. The gross profit margin increased from 48.7% to 51.8%, driven by a decrease in cost of sales, an increase in revenues, and a reduction in expenses. This uptick in profit margins is a positive sign for the company. Segment-wise performance also revealed some interesting trends. The United States segment saw a significant increase in revenue in 2025 due to higher gross profit and lower operational expenses. In contrast, the international markets segment experienced a decline in revenue due to exchange rate fluctuations and lower sales in certain countries. The reasons behind these changes are multifaceted. Increased competition from generic versions and emerging therapies has put pressure on the company's pricing power. Supply chain disruptions and ongoing optimization efforts have also contributed to the decline in net income. However, the improvement in profit margins suggests that the company is taking steps to mitigate these challenges and improve its bottom line. The company's financial performance has shown significant improvement over the past year. In 2025, the company reported an operating income of $2,157 million, a stark contrast to the operating loss of $303 million it incurred in 2024. This turnaround is also reflected in the company's cash flow, with positive operating cash flow generated in both years. In 2025, the company generated a substantial $1,649 million in operating cash flow, indicating that its operations are now profitable and generating sufficient funds to cover expenses. Although the company did incur some costs related to operating leases in 2025, totaling $136 million, this is still a positive development compared to the previous year's losses. Overall, these figures suggest that the company has successfully turned around its financial performance and is now generating positive operating cash flow. This trend bodes well for the company's future prospects and provides a solid foundation for continued growth and profitability. The company's debt level has undergone significant changes over the past year. Initially, it decreased from $17,783 million in 2024 to $16,807 million in 2025, a reduction of $976 million. However, this decrease was short-lived as the total outstanding debt as of December 31, 2025, remained relatively stable at $16.83 billion. A closer look at the company's debt composition reveals that its short-term debt decreased by $39 million from $1,781 million in 2024 to $1,820 million in 2025. On the other hand, long-term debt instruments have been amended multiple times since April 29, 2022, which may indicate a shift towards more favorable repayment terms. Regarding interest expenses, there is limited information available. However, it was noted that interest expenses may increase due to potential refinancing of debt with different repayment terms. Despite the increase in long-term debt obligations by $1,121 million, no significant change in interest expenses was mentioned separately from long-term debt obligations. The performance of Teva's segments and regions has been mixed over the past few years. In terms of regional performance, the United States segment stood out as a top performer in 2025, with a significant increase in revenues and segment profit compared to 2024. This growth can be attributed to various factors, such as increased demand for pharmaceutical products, effective marketing strategies, and efficient operational management. On the other hand, Europe performed relatively stable, but showed a slight decrease in both revenues and segment profit in 2025 compared to 2024. Despite this decline, Europe remains an important market for Teva, and the company may need to reassess its strategies to improve performance in this region. In contrast, international markets performed poorly in 2025, with a notable decrease in revenue and segment profit compared to 2024. This underperformance can be attributed to various factors such as increased competition, regulatory challenges, or market fluctuations. Teva's management may need to reevaluate its strategies for the international market segment to improve performance. It is worth noting that these trends are based on historical data and may not reflect future performance. The company's pivot to growth strategy, launched in 2023, aims to drive growth and improvement across all segments and regions. As this strategy unfolds, it will be essential to monitor Teva's progress and adjust strategies accordingly to ensure continued success. Management's outlook on company strategy. The management of Teva Pharmaceutical Industries Limited has provided insight into their company outlook and strategy through various sections in the annual report. While there is no direct statement on a specific strategy, it appears that the company is focused on adapting to changing market conditions. One key point mentioned is the company's efforts to manage its financial obligations, including derivatives and securitization. This suggests that management is prioritizing financial stability and risk management in their decision-making process. Additionally, there are mentions of accounting policies and organizational changes, which indicate that management is committed to transparency and compliance with regulatory requirements. However, these points do not provide a clear direction on the company's overall strategy or outlook. Overall, it seems that Teva Pharmaceutical Industries Limited is focused on maintaining financial stability and adapting to changing market conditions, but more specific information on their long-term strategy is needed for a clearer understanding of their company outlook. The company has made several acquisitions and divestitures in recent years. In terms of acquisitions, the company has purchased various intangible assets, goodwill, and property, plant, and equipment, which may increase following future collaborations or acquisitions. Additionally, the company acquired a significant stake in Alvotech for $40 million through the purchase of subordinated convertible bonds. The company's divestitures include the planned sale of its API business, as well as the proposed divestiture of certain assets as part of its pivot to growth strategy. The company has also announced plans to close and slash or divest manufacturing plants worldwide, as well as transform its commercial offices' footprint. Furthermore, the company has sold certain product rights and generic products in the Europe segment. In Japan, the company has made several business ventures, including a Teva-Takeda partnership that is set to expire on March 31, 2025. The company has also announced plans to divest its API business in Japan, with a renewed sales process initiated in November 2025. Overall, these acquisitions and divestitures reflect the company's efforts to adapt to changing market conditions and optimize its operations. Concerns about inventory buildup and supply chain disruption have been raised in several areas of the financial report. One concern is the company's reliance on multiple supply sources for APIs, which may be limited by regulatory requirements, page 10. Additionally, widespread supply chain breakdowns due to new health authority regulations, government shutdowns, and delays in obtaining approvals or licenses are potential risks, page 25. The high inventory levels held by wholesalers, totaling $1,638 million, page 65, also raise concerns about the company's ability to manage its inventory effectively. Furthermore, the supplier finance program obligation of $225 million, 2025, and $158 million, 2024, page 77, indicates a potential risk related to supplier finance obligations. While these concerns are not explicitly mentioned as inventory buildup or supply chain disruption, they do suggest that the company may be vulnerable to disruptions in its supply chain. The high inventory levels and supplier finance obligations could exacerbate any issues that arise, highlighting the need for careful management of these risks. That concludes the financial summary for Teva Pharmaceutical Industries Limited. Feel free to comment below, and I will be happy to answer them when possible.